Nevertheless, I think keeping cool and keeping our head down is the right way of looking at it. I think everything is cyclical, situation should improve, global demand should reestablish over some time, and I don't believe that feeding, or when it comes to energy or agri, food to mouth, hand to mouth is the right approach. I think some inventory and stock spaces will have to be taken in the long term. Of course, veg oil is so dependent on so many factors, mostly energy. We saw crudes, jumping from 68 a couple of weeks to 58 or 59 or 57. I don't know what it is today, but that's dramatic fluctuations. And being, palm, soy, and rapeseed oil being such a close substitute mandated for biodiesel programs, it's very tough to keep a stable and reliable market on the veg oil. So yeah, many factors, many challenges, and I'm excited to say that we have to keep our head down, as you mentioned, and look ahead.
Thank you, Chris. Very well explained. This comes from the heart of an international trader and one of the largest processors. It's very important for us. Now, friends, we have three very important presentations. First presentation is from our dear friend Rashid Jan Mohammed, the chairman of the Pakistan Vegetable Oil Industry Association, on the Pakistan veg oil scenario. Then we have a second presentation coming from our friend Mariano from Argentinian soybean oil situation. And third, we have presentation on soybean situation in Africa. So I believe I request Rashid Bhai to start his presentation.
Bismillahirrahmanirrahim. Ladies and gentlemen, Assalamu alaikum. First of all, I would like to acknowledge Kailash Bhai for once again inviting me to address in the Global International, and then obviously Mehta Bhai, Sandeep Bajoria, and Atul Bhai. The main purpose of coming here is also to express something about the Pakistan market, the global scenario, and the most importantly, the meeting the friends for the interactions. The topic given to me today by the organizers was Pakistan Edible Oil Outlook. And before we give some statistics, let's speak about the macro fundamentals. That since the Palm Oil Conference in 2025, markets have seen huge upheaval, primarily due to various external factors which have completely changed the market dynamics. Most of the speakers in last POC were bullish due to low production in Malaysia and Indonesia and B40 program of Indonesia. However, we all perhaps underestimated the impact of tariff war, which practically affected economy of all countries. On top of it, the production in Malaysia went up a bit earlier than anticipated. Similarly, crude oil prices came down heavily, which perhaps challenged the feasibility of B40 program of Indonesia. Pakistan finally approved GMO soybeans after a gap of 2 years. Currency volatility, Pakistan rupee remained stable, but the Malaysian ringgit remained very volatile in last few months. Fed cut interest rate to 4.25% to 4.5%, and obviously we have seen the entry of fund managers since last year. Coming back to the Pakistan edible oil scenario, our per capita consumption has slightly come down. We were at 20 kgs, but now we are around 18 kgs, and this is primarily because when the prices go up, your consumption goes down. So total consumption of Pakistan is around 4.5 million tons. Our local production is hardly 500,000 tons, and our import of edible oils is around 3 million tons, import of oil seeds between 2 to 2.5 million tons, and the oil extracted from the import seed is around 0.5 to 0.7 million tons. Pakistan mostly import palm oil and palm olein from Indonesia, and the last 3 years statistics will show you that our olein remained very high. And in the year 2024, we imported 1.6 million ton olein, palm oil 1.1 million ton. Crude palm oil is gradually diminishing from Pakistan market because of the duty structure at the origin as well as at the destination. The soybean oil import is also not that great, but it is improving, but it is low because of the tariff. So our total overall edible oil import remains stagnant around 3 million tons. In 2025, in the first quarter, we had imported more. So I think we have already touched almost 1.4 million tons till April. So maybe this year our import of palm may go up. The Indonesian still occupy the major share in the Pakistan market. So around 90% they are occupying the Pakistan market. Last 4 months it was 85-15. On the local production, unfortunately our local production is very low and we are hardly getting 500,000 tons of oil, which is coming from cottonseed oil, rapeseed oil and to certain extent sunflower seed oil. If you come to the Pakistan oil seed statistics, this is quite interesting that in 2022, Pakistan GMO soybean import was 1.8 million tons, came down to only 67,000 tons in 2023. There was no GMO import in 2024, but then last January, in fact this year January, Pakistan again allowed the GMO soybean import only from USA and Brazil. So these figures will reflect that whatever quantities we have received in Pakistan, so we have already got around 593,000 tons of soybeans from USA and Brazil. GMO canola seed unfortunately not coming. I could see Sridhar Saab and Naseem Saab are here. So we hope that we can bring some GMO canola so that I can more proudly speak in front of Mr. Sridhar and Mr. Naseem. On the non-GMO canola side, we had a lot of import last year from Australia. So we imported 715,000 tons in 2023, 611,000 last year, and this year so far 200,000 tons has come. Unfortunately, the local canola meal prices are not that great because now the poultry industry has increased the percentage of soya meal. So canola meal is not in a great demand. So this year only 200,000 tons of non-GMO canola seed have arrived and all from Australia. Non-GMO soybean in container last year arrived very much to 875,000 tons, mostly from mostly from the African countries, and only small quantity of non-GMO soybean came from Ukraine. So, but now unfortunately our friends from Africa will be missing the Pakistan market because Pakistan already paid more than $100 premium in buying the non-GMO soybean because of certain misperception having by the Pakistan government. I have also mentioned here that apart from the 600,000 tons soybean already arrived, Pakistani businessmen have already transacted GMO soybeans in bulk for arrival between May-June around 700,000 metric tons. Now this report or this paper was written last year, but over the last weekend, Friday, Saturday, Pakistan have also covered OND, October, November, December, GMO soybean. 6 cargoes were traded by Pakistani businessmen, so we have already imported huge soybeans. Similarly, non-GMO canola seed has also been transacted for May-June around 120,000 tons. Now coming to the market facts to give you some global scenario, the Malaysian palm production is expected to be around 19.5 million tons in 2025. We have already seen the production going up in the coming months, in the current months. Indonesian palm production bit difficult to judge. but I still believe 49 million tons will be there. US soybean crop looks good at 118 million tons. Argentina soybean could be 47 to 48 million tons. Brazil soybean crop looks good at 170 million tons. Indian imports, of course, it's territory of Mehta Bhai and Sandeep Bhai. It is 16.6, 16.5, but Atul Bhai was mentioning this morning that maybe the Indian imports may go down by 1 million tons because of good local production and reduction in the per capita consumption. But I think Mehta Bhai doesn't agree to it, so let's see who wins the game by September. On the market facts, during my presentation in IPOC Bali and POC KL, I humbly submitted that Indonesian government decision to increase blend ratio to B40 from B35 was indeed debatable, as prices already gone up too much in the last quarter of 2024. And this will also affect Indonesian local prices. This may also generate debate on DMO. You are aware about the domestic monitoring order in Indonesia. Question is, do we really need to increase the blend to B40 when crude oil prices are uncertain? Further, do we need to use palm oil for food or fuel? It's a big debate and I have short time, but I love to speak on this subject that we are focusing more the edible oil going into the fuel rather than the food, whereas the country need, where the global requirement is more for the food. The Malaysian ringgit was stable during October 23 till June 24 between 4.71 to 4.76. However, the Malaysian ringgit recovered July onwards and revalued to 4.12 in October and again got depreciated to 4.49 in January 25. However, the Malaysian ringgit is again appreciating and it was 4.25 only last week. It touched to 4.19 yesterday and 4.23 today. This huge volatility has indeed affected the physical prices and put pressure on the Malaysian derivative exchange. Crude oil still remains a political commodity and the price vary on geopolitical situation. Overall, crude oil prices remain steady to lower. Malaysian stocks of palm oil in March 25 were 1.56 million tons. It is expected that stocks will now go up as we are in the heavy production months. The highest we have seen on Malaysian derivative exchange was 5,195 when Sandeep Bhan was smiling like anything. But now we have also seen Malaysian ringgit touching 3,680 on 16th August 24. That is swing of around 41%. Which is indeed a huge swing on any market. Sunflower rapeseed oil prices, which were lower than soybean oil last year, has reversed and now due to crop situation, sun oil is costing more than soybean oil. Soybean oil generated huge demand all over the world as after a very long time, soya oil remained almost $100 per ton lower than palm. Pakistan would have imported more soybean oil if our local import tariff was workable as compared to palm. However, soya oil market have now again gone up and soya oil is commanding premium over palm. From January 25 onwards, Pakistan importing GMO soybeans due to recent approval. This is a very good sign as Pakistan paid huge prices for non-GMO soybeans and the supply remained very compromised. GMO soybean vessels have started arriving and this will mostly help our poultry feed industry since GMO soybean has been allowed. We are now waiting for the permission to import GMO canola seed so that we can satisfy my very good friend Mr. Sridhar sir. The recent trade war due to imposition of tariff by the USA continue to create huge uncertainties in the market. Now let us come to the last slide on the forecast. When everything is clear, nothing is clear. The market being deliberated upon do give us certain directions. Funds will remain a constant force apart from the fundamentals. Palm production is expected to go up till October 25 and this will put pressure on the markets as destination demand is slow for the time being. Most of the bearish factors have been factored in like huge uncertainties due to tariff war, geopolitical situation, increase in production, and low crude oil prices. Soya oil is now once again commanding premium over palm, however, destination demand remains low. Based on the market facts, I believe that July, August, September MDEX may remain between 3,600 to 3,900. However, with appreciation of Malaysian ringgit, physical prices may not come down heavily. This is my belief that markets have already seen lows, and hopefully it will be difficult for the MDEX to break 3,800 in the near future, but let's see how the things move. I always conclude my presentation with a quotation. So today's quote is, "The greatest glory in living lies not in never falling, but in rising every time we fall." By Nelson Mandela. This shows that market is falling, but there is an opportunity, market will go up. So let's enjoy the market and wish you all the best. And I have given test of my eyes to the reading so far. So I can now tell my doctor that my eyes are working very well. Thank you very much, sir.
Thank you, Rashid bhai. Very nice presentation. And now we have our friend Mariano from Embassy of Argentina and India, the commercial counselor on the soybean oil scenario.
So good morning to everyone. Just clarification, I am Argentinian diplomat based in Delhi. This is not my territory, but I was kindly invited for the organizers of Teflas and Globoil, and I have been participating in Globoil in the last 6 years since I moved to Delhi in India. So today, I'm going to make a brief presentation about how is the current scenario about Argentina soybean oil and sunflower oil situation. And I'm not going to talk about prices, but I'm going to try to have a very updated data what is going on in the harvest in Argentina of sunflower oil and soybean oil. Okay. So, first of all, I am here as a seller, I am not a buyer. Argentina is not buying edible oils, I think everyone knows this, but it's important to know who are the biggest partners for us. This is how much soybean oil we exported last year and which are the biggest buyers of our soybean oil. Of course, Asia is one of the biggest buyers of soybean oil in the region, and also other near countries are buying, but not so much. India is for very far away, our biggest buyer, also Bangladesh. Pakistan is also there in the list, but they are not buying much some soybean oil from our country. If you go to sunflower oil, we go to what is going on now in Argentina with the harvest. Numbers are near 50 millions of harvest for this year of soybean production. We have a draw in summer this year, but apparently after the rains came, we are going to have better yields per hectare. There is an expectation. We are just starting to harvest, only 6-7% of harvest of soybean, new soybean is happening now in Argentina. Because of the rains, we have been, there are some delay on the harvest during this year. But the expectation is that we are going to be close to 50 million tons if nothing happens with the weather, you know. This is how the crushing industry is moving. Business as usual. A little bit delay, as I said, because of the rains. Harvest was delayed, so the truck with soybean coming from to Rosario port is taking more time than usually 50-20 days a delay. But the tendency seems to be that it's going to be a normal year for Argentina. Yeah. Also, there are some farmers, what they're saying about Ukraine. In Argentina, the same is happening, situation with the peso, what is going on. Farmers are trying to wait until to see if the price go a little bit high. However, farmers will have to sell the harvest because they have to pay for the input for the new harvest. So maybe a little bit later or maybe a little bit early, but farmers every year sell all the harvest because we don't have a domestic market to consume them. Biodiesel industry is not so, the demand of biofuels in Argentina is not so high. So all the soybean oil that we are producing is only mostly for export purposes. That gives us an advantage compared with other countries that supply because we don't have a big program for biofuels compared with Indonesia, for example. So in that way, we are a constant supplier of soybean oil. So as I said, the ships are waiting for start putting the soybean oil. This is the port of Rosario in Argentina. This is a very important image that I always like to show because show you the advantage of Argentina logistic point of view. This is the port of Rosario, and behind of the port you can see the Pampa. There's where we grow the soybean. So that means that we don't have problem with logistics. We don't have to travel 2,000 kilometers with the soybeans to the crushing industry, and directly from that river, that is the Rio Paraná, is go directly to the destinations. So there is an important advantage compared with other countries that have to, and also it's reflected on the price. No? We have other kind of problems, but this we solve it. Coming to sunflower, my background is I am an agronomist. I come from a fourth generation of farmers. So these are two pictures. This is me in my summer in 2023. In January, visited my family farm with my horse, and this is my father this year about growing sunflower. You see, it's a gaucho from Argentina. So I can for sure say that our sunflower production in Argentina is growing. Because of what is going on in geopolitical, geopolitical waters, prices, and in the Black Sea region, margins from sunflower cultivation in Argentina improve. So the last 2 years, we have been increasing our export of sunflower oil as well. These are our main destination of sunflower oil to different countries. India is also the top one. That is why I'm also here. And Iran is also the second one. However, Pakistan is not in the list. They are only importing very low quantities of sunflower oil from Argentina. And the rest of the countries, you can see there are some other countries from Latin America also they are buying because in Latin America it's more common to consume sunflower oil for cooking, no? Instead of soybean oil. So the demand of sunflower oil in the Latin America region is also important for us. According to the last data about what is going on, we almost done with the harvest of sunflower oil, sunflower in Argentina. So this year we are going to be harvesting close to 5 million tons of sunflower. This is an increase compared with the last year that we suffered a drop. And the margins for farmers, it seems to be they are very positive for this year as well. We have to see because we are going to start sowing sunflower in October. So from here to October, there are a lot of things can happen in Argentina, but it's also very positive that for second year prices are good, and for third year prices are good. So farmers in some regions where sunflower cultivation is better to soybean, they will remain producing sunflower. The same here, what is going on, this data is until March, it's not April data, but what is going on with the crushing industry. Business as usual, all the crushing industry is moving. Most of the farmers that have sunflower already sell it or they are expected to sell it. Usually farmers, what they do is sell first the sunflower and then they go for soybean, for selling soybean because it's a guarantee to having soybean. Usually the price of soybean is better to sunflower, so it's in the business as usual of farmers in Argentina to sell first the sunflower and they go for soybean if they need. Last year, we have a carryover of soybean of 10 million tons because they were expecting that we are going to have better prices. Now they have started selling. They cannot give 2 years the amount of soybean. We are talking about crops. It's not that you can have it in your garage, so you have to sell it. And this is, I'm going to stop here because in my last 5 years in India, I have been listening some names there are in Spanish. Sorry, but the translation is not my chart, but it's very important. This is the yield breaker of soybean and sunflower in Argentina. For the last 20 years, and they make a calculation how it's going to evolve the soybean yield per hectare in Argentina and sunflower oil per hectare in Argentina. As you see, if you compare what is going on, the green line expressed based on the last 5 campaigns, the last 5 seasons in Argentina of sunflower, what is going to happen in the next 5 years if we maintain this level of technology. What I want to mention with this is that Argentina, most of all you know, Argentina is a GMO crop, cultivation of soybean oil. Does not guarantee the yield per hectare. Because I have been listening a lot that the solution for increasing yield per hectare is the GMO. It's not necessarily what is happening. We have been using GMO in soybean for the last 30 years, and look what is happening in the yield per hectare. So if you see what is going on in sunflower, you can see sunflower yields, farmers have been increasing because you are managing hybrids, so you have to buy every year the seeds. You are using hybrid, autogamous, that you can keep the seeds for the next year, you don't have to pay royalties for that. In sunflower, the same in corn, you have to buy every year. So if you see what is going on in sunflower, the yield per hectare is increasing. So this is, I want to bring this because I have been listening a lot that the solution for those countries that want to increase the production of soybean oil or soybean is the solution is GMO. This is not necessarily what is happening in Argentina. And then I want to also make a comment about this, how important is agri-export for Argentina economy. Because this is a different, if we compare with other suppliers countries. This is how much important is agriculture production, agriculture export to the economy of Argentina. Almost 60% of the input divisas that Argentina receives is come from agriculture products. That means that every politician, every policymakers, they will be always thinking how to increase the inputs, the divisas income to receive in the country. So that is what I want to say, because you can read a lot of news what is going on in Argentina, new president, new government, and whatever. But the thing is, Argentina is going to be a constant supplier because agriculture product is very important for our economy. Very different what is happening in a lot of countries. So, to conclude, as I said at the beginning, the draw is not impact soybean and sunflower production in Argentina 2024-25 as much as initially expected. Because they were saying that in January, because there was no rain, the production will be less than 47 or 48. So it seems to be that after the rains, the yields are increasing. Now we are harvesting and the first results of the harvest are very good. Second, farmers always sell. When they believe they are getting the best price, harvest and sell, delay because of the rains. But they will always say, we can keep this amount of rains because we don't have a domestic market to incorporate. Second, the reduction of export units will end in June 30. So, as you must know, Argentina have export units in soybean oil and sunflower oil. So, we have a reduction by the government until 30 of June of 26 export units for soybean oil. In 30 of June, increases, according to the president, they are going to increase again to the 33% export units soybean oil. So this is also important to have in consideration. And then the government, this government, President Milei government is trying to do everything he can in his hand to stabilize the economy, macroeconomy. his economic team is worried about the macroeconomy of Argentina, a big problem that we have been facing for decades. So he's concentrated on that. But he, as soon as he can, he will do everything he can to improve the profit of the farmers. They already reduced to zero some export duties for some particular commodities, but they are trying to improve they are taking a lot of measures to reduce import duties for fertilizers, agrochemicals, to improve the profit of farmers. Also, temporary export duties reduction for increase the profit of farmers. Reduce the import duties for import machinery from different countries, because we want to increase. This government wants to increase the yield pressure of the farmers. So the other thing important is we are going to have midterm elections in October. It's very important for the 2 years of government of Milei. Everything, when this happens, everything can happen in Argentina. And Argentina, as I said, and to conclude, Argentina is a reliable and stable supplier of raw material for decades. It's not that the government will change or election will change, we are going to still there. Thank you very much.
Thank you, Mr. Mariano. Very nice presentation. And I must tell you, he is a true friend of India. We took a delegation to Argentina last year of 22 people from India, and they treated us like a state guest. And instead of water, we were drinking Argentina wine on the way there. Thank you, thank you. So now we have presentation on Africa from our friend, Mr. J.P. Copes, Managing Director of FR Waring International, South Africa. Please.
Good morning to you all, and thank you to the organizers or all involved in arranging this event, giving us the opportunity to come and share some of our insights around soybean production throughout the Southern African region. Just a brief note for those of you not familiar with FR Waring, we are an independent-based commodity trader specializing in oils, fats, and oil seeds and proteins. We trade from Angola up to Tanzania. And really, we're a homegrown business in South Africa, started in 1929. I did promise I would keep this brief, so coming to the topic at hand. South Africa's soybean, or Southern Africa's soybean growth has been all but remarkable. If I look, it's been a truly successful initiative across the value chain. Whether you're a small-scale farmer, commercial farmer, crusher, animal feed producer, livestock, poultry producer, it really has created value. Over the last decade and a half, we've seen a remarkable increase in soybean production across the five key countries in Southern Africa. So whether it's South Africa, Zambia, Zimbabwe, Malawi, and Mozambique. Each of these markets is experiencing a different stage of the growth curve, but the direction is clear, it's upward. South Africa is leading with just over 2.4 million tons expected to be produced in 2025, followed by Zambia with over 350,000 tons, and then followed with the likes of Malawi and Zimbabwe. Traditionally small producers, but all are expanding rapidly. The driving force behind this is largely demand from the poultry and animal feed industries, as well as the expanding population growth and a migration of the population to the urban metropolitan areas, which is driving consumer demand. Specifically, the animal feed sector demands high-protein soybean meal, and importing meal is both costly and logistically challenging. Mariano, no offense, we were big importers of Argentine meal. Importantly, we now have more crushing capacity in the region than we do soybean production, which just shows how far ahead of infrastructure has developed. There's space for more bean production as meal and oil demand continue to grow. Really, what's driven this expansion and what makes soybeans especially attractive in our region isn't just the price, it's the agronomic benefit. Soybeans as a legume fixes nitrogen in the soil, meaning they naturally boost soil fertility and reduce the need for synthetic fertilizers. When rotated with maize, soya improves the maize yield in the following season. The same goes for sunflower seed, where we typically see higher oil contents when sun is planted after soya. This is particularly helpful in countries where farmers struggle with marginal lands, rising fertilizer prices, and climate variability. The result is that soya is being adopted not just as a cash crop, but as a smart part of the long-term rotation system. Better seed and precision farming. South Africa is a case in point. We've seen over the last 10, 12 years, our average yield has grown from 1.6 to almost 2.4 tons per hectare, which is a 44% increase across the board. What's behind this is a mix of better seed genetics, including drought-tolerant, early maturing varieties, as well as a widespread adoption of conservation agriculture. Farmers are using precision agri tools, GPS-guided planters, variable rate seeding, satellite and drone imagery to track moisture and growth stages. This is enabling farmers to push into the marginal areas where soybeans historically wouldn't have been planted. An interesting fact, South Africa and the region is one of the few places where soybeans are grown above 1,500 meters above sea level. Smallholding soybeans, particularly in the region, we've seen a massive switch and a big benefit. Typically, cotton and maize were planted. Soya is offering them a balanced, profitable, and lower risk alternative to maize and cotton. With improving yields, lower input costs, and strong feed industry demand, they represent a smart rotational crop and profitable diversification strategy for both commercial and small-scale farmers across the region. I think if you look at this chart, you'll see clearly the trend of cotton declining in the Southern African region from both a yield and hectareage perspective, and soya increasing. Population growth is also a massive factor. I mean, according to the UN, between 2010 and 2040, the combined population of the 5 countries we touched on is projected to grow by over 85 million people. This represents nearly a 65% increase. Malawi, Zambia, and Mozambique are expected to nearly double their population, and this rapid demographic growth will significantly increase demand for food, vegetable, protein sources, and arable land. For regional agribusiness, this presents a long-term opportunity to scale soybean production and oilseed supply chains in response to growing domestic consumption. Longer-term prosperity of farmers and an increase in disposable income are directly linked to rising production of soybeans by small-scale farmers. Really, what has driven this initiative over the past decade? The key driving force in the South African or Southern African region has really been the poultry demand, right? Poultry meat production across the region has grown from 1.65 million tons about 10 years ago to 2.27 million tons today. This growth has been most rapid in the smaller economies, naturally off a small base, so Malawi, Mozambique, and Zimbabwe, countries where meal demand has grown faster than oil demand. Poultry producers require a reliable, effective, costly source of protein. Imported meal is expensive and often logistically unreliable. Local crush of soybeans provides a double benefit: meal for the feed sector and oil for the food and industrial sectors. The quality of local soybean meal has also improved dramatically in recent years as compared to the traditional source from Argentina. Local oilseed meal production has replaced imports over time, growing from just over 450,000 tons in 2009 to over 2 million tons today. Imports now make up less than 10% of our total usage, down from over 70%. This shift reflects the region's progress towards self-sufficiency. The good news, we already have the crush capacity infrastructure. South Africa is running at high utilizations, about 87% of crush capacity. The system is well aligned to production volumes. Zambia and Malawi are just under 50 to 60% of their crush capacity. There's a lot of room to grow if crop sizes improve. Zimbabwe is sitting with underutilization. Crushing infrastructure is there, but underutilized due to domestic bean availability. Mozambique is on the other side of the spectrum. Production is exceeding processing capacity, which signals a need for potential investment in crushing facilities as well as an expansion of bean production. So across the board, whether it's investing in crushing or expanding crop sizes, we have room to grow. As domestic soybean crush increases, we are seeing a slow but steady decline in the volume of total oils. Soybean oil, sunflower, and palm oil all being imported less. It's a major achievement in terms of reducing foreign exchange outflows and improving food security in the regions, as well as local meal and oil production, giving buyers more flexibility and encouraging intra-regional trade. Countries like Zimbabwe, Malawi, and Zambia face a major challenge as they're landlocked. That means every ton of imported product has to travel long distances from coastal ports through different logistics channels at a high cost. The result is Landed costs are significantly high, and FX risks due to volatile domestic currencies are inherently there. Local crushing solves this. By sourcing beans from within the region and processing locally, these countries avoid expensive logistics as well as reducing supply chain lead times, all contributing to GDP growth through industrialization, employment, etc. Currently, South Africa and Mozambique, with their port access, play a key role as hubs feeding these markets. Lastly, we talk of currency. The crushers purchase beans in local currency, whether that's in rands, kwacha, meticals. They then sell either the oil and meal or a portion of it in hard currency. This means they generate forex earnings rather than spending forex on product imports. In countries like Zimbabwe and Malawi, where official rates differ from parallel market rates, this arbitrage can actually make a loss-making crush look profitable in real terms. This is why we're seeing crushing continue to expand, even when international price levels don't fully support it, because the FX impact matters more. Thanks to regional growth or production growth, soybean oil from domestic crush is now starting to compete directly with imported palm in some food and industrial segments. While palm is still dominant in certain use cases, buyers are increasingly open to blends or substitutions, especially where they want non-tropical or specific tailor-made oils. As more soybean oil becomes available locally, we expect greater price competition and more tailored oil sourcing strategies. Lastly, the regional trade agreements, the frameworks such as the African Continental Free Trade Area, the SADC, are making it easier to move oil, beans and meal across borders. These agreements remove tariffs and simplify customs clearance between member states. It's critical for the soybean value chain, where beans may be grown in Malawi, crushed in Zambia, and the meal sold into Zimbabwe. Cross-border integration is improving and is being driven by commercial needs, not just policy. Really, just to sum up, Southern Africa has created a fantastic foundation to build on. Farmers are shifting to soybean because it boosts soil health and profitability. Efficient crushing infrastructure exists and has space to grow further. Demand from the poultry and feed sectors is strong and continues to grow. We need to feed the growing population, and critically, we need to improve our regional trade and FX dependency. This creates an exciting environment for investment, trade partnerships, and long-term agricultural sustainability throughout the region. Thank you very much.
Thank you. It was a very interesting presentation from South Africa. So we've been lucky that we had two gentlemen, Mayur speaking from India, Chris speaking from Russia, Ukraine, and sunflower. Then we had Pakistan scenario from Rashid Bhai. We had Argentina scenario from Mariana. We had South Africa scenario from our friend. Now, what is left is Indonesia. Our friend from Indonesia could not join personally because of the visa issues, but he has sent his video of the presentation. Let's have a look at it. Please run the Indonesian presentation.
Actually, I was already in Doha on my transit from Istanbul, but by the time I was to board, the e-visa that I applied was not issued, so I cannot then apply to Dubai. Second, my thanks to the committee for inviting me to this important conference. I have a privilege to attend this conference annually. So again, my apology for this inconveniences. But what I would like to talk today is about the topic of the impact of the Trump era reciprocal tariffs on and an update of the Indonesian palm oil industry. Indonesia, as the world's largest producer and exporter of palm oil, critical commodity in its agricultural sector, and the United States, while not the largest importer, has been a significant market for Indonesian palm oil. Indonesia export of palm oil to the US continue to increase, and palm oil is one of the important commodities commodity exported to US value at around 1.7 billion US dollar in 2024. In addition, the US palm oil market also dominated by Indonesia, which share is around 85%. As we know that on April 2025, the US imposed 32% reciprocal tariff on import from Indonesia, including palm oil products, as a part of the broader strategy to address the trade imbalances. And then what I would like to do today is to explore the direct and indirect effect of this tariff on Indonesia palm oil industry and the policy response of the Indonesia. As you know that the Trump administration trade policy characterized by the imposition of reciprocal tariff aimed at reducing the U.S. trade deficit by levying higher duties on import from countries with which the U.S. had a significant trade imbalances. Indonesia, identified as a major contributor to the U.S. trade deficit, faced a 32% tariff on its export, including palm oil. The move was part of the broader Liberation Day initiative to recalibrate the U.S. trade relationship. So, what is the impact on the Indonesian palm oil export? The export challenge on the direct effects and long-term implications of this policy is that we think that the U.S. market accounted for approximately 7% of the Indonesia palm oil export value in 2024. So the imposition of 32% tariff has led to the concern about reduction of the competitiveness of the palm oil industry in the U.S. market, and also the reduction in export. However, our analysis saw that the direct effects of this policy on export of palm oil industry is not very significant. We estimate that there will be 2.61% reduction in terms of the export of palm oil to the U.S., while as a whole, Indonesian export will decline by 2.83%. However, there will be another impact of this policy since our neighboring countries face lower level of tariff than Indonesia. So, assuming that there is no deal in negotiation between Indonesia and the U.S. on lowering their tariff, then there will be a transshipment of palm oil products to U.S. to our neighboring countries. This of course will increase the cost and reduce the competitiveness of the palm oil product in the U.S. And actually what we concern more is the long-term implication of this reciprocal tariff on the economy as a whole and its impact on the palm oil industry. As we know that this policy might bring the world economy into a recession if there is no agreement among the U.S. and its trading partners. Many countries will experience slower growth in their economy, and when this happens, the demand for vegetable oil, including palm oil, will be weaker, and then export will be lower. Our study shows that there is a considerable correlation between the growth of the economy in a country, especially in the importing countries, of palm oil with the demand for palm oil. So this is the things that I think in the long term we have to watch closely, while at the same time now I think the impact on the long-term palm oil industry is remain to be seen. The reciprocal tariff have highlighted the vulnerabilities of the Indonesian palm oil industry to shift in a global trade policy. While the immediate impact may be manageable, the long-term effects would include the need for structural adjustment in export strategy and market diversification. The situation also underscores the importance of robust trade agreement and diplomatic channels to safeguard the national economic interest. Now, what is the policy response in this regard by Indonesian government and the industry? So, in response to this tariff, Indonesia has intensified export to diversify its export market. The government has identified opportunities in African, Middle Eastern, and Central Asian market to compensate the potential loss in the US market. These regions present emerging market with growing demand for palm oil products. And another domestic policy adjustment that Indonesian government has implemented is to mitigate the impact of the US tariff, including adjustment in the export tax and levies to reduce the the cost burden of the exporters. Additionally, regulatory reforms have been initiated to enhance the competitiveness of the Indonesian palm oil in the global market.
Thank you. The international presentation is over. And friends, as we are short of time, we are not getting to any question and answer sessions. The panelists are here in the conference. You can always talk to them, and if you have any questions, you can address to them. I think let's take a group photo. Everybody come together.
Indeed. Ladies and gentlemen, let's get our hands together. A nice warm round of applause for all our esteemed panelists up on stage. Thank you, Mr. Bajoria. And all our esteemed panelists. Please do step up in front, please. And now after this group photograph, I would request Mr. Bajoria, our moderator, to kindly present mementos to all our esteemed panelists. So I request Mr. Sandeep Bajoria, sir, if you can kindly present mementos to our panelists, starting with Mr. J.B. Coppens. Oh. Mr. Mayur Tosima, thank you very much, sir. To Mr. J.B. Coppens, thank you very much, sir. Ladies and gentlemen, please do join in with a nice warm round of applause. To Mr. Rashid Jan Mohammed. Thank you, sir. To Mr. Mariano Behram, thank you very much. Mr. Christoph Queer, thank you so very much. Thank you so very much. I'd like to request Mr. B. Malik, sir, if you please join us up on stage to present a memento to Mr. Sandeep Bajoria. Let's have a nice warm round of applause. Thank you, sir, for joining us. And Mr. Malik will present a memento to Mr. Sandeep Bajoria, moderator for this fabulous session. Ladies and gentlemen, once again, get together with a nice warm round of applause. Once